Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, January 4th, 2022. Markets, take a look. Wild day, folks. We gapped higher today. Then we saw a massive sell-off. Now, you can see on the spiders here, on the intraday spiders chart, we opened up here. We flushed all the way down with a bounce back to this upsloping trend line. Then we flushed again. Notice we didn't take out the lows from yesterday. Now, that's opposite of what happened to the Qs. The Qs did take it out. It was a nasty sell-off. Look at the drop on the QQQ here. Now, the culprit of the drop, why the Qs, the NASDAQ 100, underperformed is very simple. Yields continue to push up. And again, we talked about it yesterday, how as yields would approach, or if yields approach that 1.75% on the 10-year, which was the previous high, then the market would start to get a little spooked. And surely technology, as I said, would lead that sell-off, and that's exactly what happened. Now, you can guess what happened later in the day, right, guys? Again, shouldn't take a genius to think, why did the markets rally in the second part of the day or in the late day session? It wasn't because there was a miraculous news on COVID or anything else like that. It was because yields pulled back. So listen, bottom line is the 10-year yield still closed higher on the day, but again, the last hour to 2 hours of the day, yields pulled back off of their highs. We settled in, or we're currently trading at 1.649. Basically 1.65%. And we were closing in on 1.77% at one point today. So that's the essence of it, folks. Really, again, insane sell-off in technology. It was nasty out there, folks. Again, I used it to accumulate more Peloton. That looks like a very smart move at this point. Take a look at Peloton. Look at the rally off of the lows, folks. And again, our average is 34.05. The stock closed at 33.81. So just by utilizing that averaging in technique, starting with a small position, then being ready in case it flushes, which it did on the panic sell-off today, we were able to get our average to the point where we're basically flat on this trade. And now if it starts to bounce, it's even more oversold than it was when we picked it up before yesterday. Now, again, if it bounces, boom, in the money it goes. Easy, in my opinion. It's easily going to be a 10% plus winner. We just got to wait for that bounce to come in. I also bought NET today. All right, this stock hitting major support. Look at this late day rally in it, by the way. In fact, it went lower than my initial buy, which is not a big deal, right? Because if it had actually gone a little bit lower, I was going to even add to this position since we started with just a 1% position. But again, 113.55. By the end of the day, it closed right around 115. And again, what's amazing about this chart, folks, take a look at the daily chart. All right, this is why I wanted to get involved here. Look at that major support. And again, we should easily, in the very least, you should see a bounce back to about 125 to 130, which would be just retracing to these former lows. Again, if we wake up tomorrow, markets are getting pounded, maybe it goes a little bit lower. Maybe it touches a 100 even number. Do we care? Not really, right? Because what are we going to do? We'll just buy a little bit more, bring our average in. When you have a stock like this, that's a pretty well-known stock, Cloudflare, very, very popular. Obviously, you could see the run it had up. By the way, we were short up here. I still remember that vividly. Wild trading there as well. But again, you're not going to see this thing go to zero, right? I mean, it makes about $1 billion in revenue this year, or at least projected to. It's got some real stuff there. It's got a lot of notoriety. So there's going to be a bounce at some point. That's why we buy a little bit. If we get the bounce right away, awesome. If it goes lower, we average in. And there you get that move. So very cool stuff, guys. Love seeing it. Love seeing the action already this year. And again, that's what it's all about. Starting to get us involved in, basically the volatility that I'm expecting to last pretty much all year long. The more the Fed tapers, the more of the cushions. Think about bowling where you have those things that go in the alleys, the two side, gutter ball places, right? And then that's what the Fed has been doing. Now, as the Fed removes that stimulus via QE, right, they're taking away their QE, what's going to happen? It's going to remove those safety kind of things on the side. It allows the market to be much wilder. There's going to be some gutter balls thrown. There's no doubt about it. You're going to get more volatility, and volatility is what we love. It's when we can buy stocks like NET that have sold off from $220 in basically a month and a half and bottom out today, let's say at 108. I mean, think about that, 220 to 108. And then, again, all we care about is just give us a bounce back to 125, 130. A minor bounce in the scheme of that fall. For us, it's major. It's major money, as that, again, is a sizable bounce. All right, so that's where we stand on that front, folks. We'll continue to monitor it and see. Let's look at some other charts here. Let's go actually to the daily chart. The spiders, again, had a beautiful pullback earlier in the day, right? But again, when we were all said and done, it still looks like this potential bullish move up is still intact on the chart here, the SPY chart. And again, if it continues up, this is where we're going, this upsloping trend line right there. And again, I guesstimated yesterday where that was maybe 485 or so. But again, I'm not 100% sure. Let's just wait for the charts to get there. We'll know as soon as the price touches the line, basically. Okay? All right, so that's nice there. Let's go to the QQQ here and bring up that. Now, we did have a bigger sell-off on the Qs. And again, the Qs, in my opinion, if rates are going to go up, though that's where you're going to see most of the suffering. Now, yesterday, Apple hit a $3 trillion valuation. Today, down about $2 and change, so it's back below $3 trillion. I think even yesterday, it technically closed back below $3 trillion after hitting it intraday. But bottom line is, we saw Amazon, Google, Apple, Microsoft, Facebook all down. Tesla got walloped today. Again, after such a big move yesterday, at one point the stock was down something like 75 points or so, closing down about 50 on the day. But just a remarkable kind of reversal. I was actually surprised on Tesla because there's a gap fill right here. I was so certain that today, when it was fractionally green at one point today, I was so sure. I was like, all right, well, it's got to fill the gap. I mean, gaps are made to be filled. Then it pulled back. Don't be surprised if it moves back up potentially to go there over the next week or so. Let's watch very closely. Now, I will say one thing. You come into the market first trading day yesterday and you get the update that I expected. Did I expect this much volatility on day number 2? Maybe not this much. Now, again, in all fairness, the S&P recovered and basically was able to close basically flat on the day, right? So, I mean, it still kind of eked out a pause day, even though there was lots of intraday whipsaw. But again, this is very interesting to kind of behold, seeing how, the spiders, there was some institutional selling. I guess that's the point I'm trying to make here. There were periods today where you had significant sell-side action, especially early in the day. And if we go back to the intraday chart here, let me bring up the spiders with all my day trading lines. You can see how many lines I have on from day trading. But if you looked at yesterday earlier, you kind of had that too. I mean, you had this wallop early on. Now, today was a much bigger one. But you got to wonder here what was going on here, and it happened kind of again today. And then look at the second half of the day. When the institutions step away, the markets move back up pretty precipitously. So again, I'm in a position here where I'm trying to figure this out. So are the institutions now aggressively unloading? My guess is yeah. I think they know that with the Fed tapering and continuing to taper, the writing is on the wall. Valuations have to come in. Now, obviously, there'll be certain stocks that are going to do well in a rising rate environment. I think the one we obviously have here is Viacom. Viacom up again today. Beautiful little move. Discovery, which I hold with the live day trading room, up again today beautifully as well. These stocks do really well. Stocks that pay a high dividend, all right, and are low PE stocks, those do better in rising rate environments, right? So again, look at it like a DuPont or even a Boeing today did very, very well. Travelers, those type of stocks that pay a dividend, those type of things. Also, J.P. Morgan, Bank of America, just rock star amounts. I mean, they just did so well. So we'll have to watch and see how that trades out. But you can see JPM today, just a great day on J.P. Morgan Chase. All right, so again, we'll watch and see how it all plays out. I'm curious myself to see where the markets go tomorrow. Again, we had the big sell-off, then kind of a decent-sized rally back. Do we resume the selling pressure tomorrow morning only to float up later again like we've seen the first 2 trading days of this year? Or, do we see something enough different? Now, keep in mind, I believe tomorrow afternoon at 2 p.m. we do have the Fed minutes. Now, the Fed minutes are not the Fed decision. It's not the rate meeting. That's later this month. But the minutes can kind of guide the market, and it could either freak the market out a little bit or bring the market back in. So, I mean, there's definitely some things we want to watch in that respect. Okay, let's see what else we have on the radar here as we go through. Let's flip back to the daily chart. Let's go quickly to the QQQs. So Qs again, here's, the question again on the Qs you'd have to ask, is this still part of a bullish consolidation, right, which I think it is, at least as of now. If we had closed down here, maybe not. But they rescued it, keeping it within these kind of parallel lines. So again, that's still a possible bounce play. But if it starts trading down here, then that takes it off the table. The angle is too steep at that point for it to kind of hold up. And then you could easily be headed down to this line. Okay? Looking at the Russell, let's take a look at the IWM. IWM still fighting this line. I mean, you got to give credit to the IWM that it's being willing to fight this line so much. It made a short-term higher high here, but then got pounded down, closing basically fractionally negative on the day. But still, I mean, it so far hasn't broken out. Do I think it's going to eventually break out? Yeah, I do. I do think eventually it will break out, and we will see it move higher. All right, again, gap fill is my target here on the IWM. Next up, let's take a look. We got to take a look at Bitcoin, guys. Always got to check in on the Bitcoin chart. I know a lot of you guys do want me to analyze it. This is Binance Coin. Let me flip over to BTC US dollar here. And really remarkably, Bitcoin just continues, and these are some former lines. Let me get rid of those. But Bitcoin just continues to hammer on the same level, this 45,800 to 46,000 level. I mean, just remarkable again today. At one point, we were trading in the 47s. Then it flushed right back down to that 46 to 45.8, and it's still hovering above. So it's still holding. But remember the methodology. The methodology dictates that the more you hammer on a line, the more it can potentially break, or the weaker it becomes, the support becomes weaker. So we've hammered on this a lot. It would not surprise me to see very, very soon a break lower in Bitcoin. I still think you have to kind of marvel at how the U.S. equity markets, the stock market, has held up so well, hitting new all-time highs. And usually you'd say, oh, well, Bitcoin is, when the markets are doing so well, usually Bitcoin is making new highs too. It's a risk-on asset. But really, it's not, at least this time. And that has to be a concern. If you're holding Bitcoin or significant positions in Bitcoin, it has to be a concern. The performance here has been horrid. So what happens when the stock market really starts to deteriorate? You got to believe Bitcoin's going lower. And the head and shoulders dictates that. Now, granted, it hasn't fully formed, and it hasn't triggered yet based on the neckline. But it is what it is. Still forming and still pretty nasty, in my opinion. All right. So we'll continue to follow that, folks, and see where things go. Let's go back to a couple of the other charts here that we look at. Let's flip back to the GLD. And the GLD got a nice little bounce today. So again, nothing really new to report here. You got the retrace sell yesterday, snap back today. You're still essentially between the wedge pattern on gold. You can see it there beautifully. Really a long-term wedge pattern going back to the beginning of 2021. Eventually, like I said, it's going to break out. Don't really have much more to say on it than that, since I've said that every day. Same thing with silver. Silver may be chopping sideways, consolidating. I'd like to see more consolidation before I really believe it's a high probability move to the upside trade, but certainly looks interesting at this point. And lastly, let's take a quick look at the oil chart. Oil hit this gap fill finally, right? So we had pulled back, then we made one more push up, still a major gap fill there. As soon as price pierced that line, you could see it getting propelled back down. And again, I'm still in the camp that I'm glad we're in some SEO here. I think we'll get paid out pretty nicely, and we should do very, very well. So good stuff, guys. I love the volatility. The volatility should continue. This is probably going to be a record year for swing trading profits because as the Fed, listen, if you look at the markets, since 2009, by the way, I started this company in 2007 with Nick, and, basically you had dead markets in 2007. Then you had 2008 with the meltdown, right? In 2007, there was light volume. By the way, very reminiscent of what we saw prior to the volatility we're seeing now. The volume was basically at historic lows. Margin was at historic highs. The housing bubble was there. All these things were going on. By the way, housing bubble is here now, although it's starting to deflate from everything I'm seeing. But all these things were there. And then we went right into the 2008-2009 period, which was just absolutely insane. And then following 2009, the Fed has just been, lower interest rates and then more QE, more QE, more QE. And you could even say that you culminated with the 2021 period where you had government sending checks plus QE. There was just so much money flooding in to the market. And now it's starting to abate, right? So now the Fed is cutting back on their stimulus. Now, they're still going to keep interest rates low. I don't think they have a choice, in all fairness. But they're going to let it go up a little bit, I'm guessing, considering especially with the inflation numbers. But the government's now kind of tied. You're not seeing a lot more stimulus coming out from the government. And that's kind of a subtraction as well from what people had gotten used to over the last 12 to 18 months. So, again, you're going to see more volatility because of it. Again, for us, I'm not going to argue with it. Let's play ball. All right, have a good one, guys. Thanks, as always, for being members. Love it. Have a great one. I'll talk to you all tomorrow. Take care.